So the market cap is $2.168 trillion. And now the market, it went to zero.
GM, welcome back to the channel. In this one, let's talk about the market, updates, Bitcoin, Kerosene, with the stablecoin narrative, which I want to go over a major piece of news that you may have missed. And we'll talk about pump fund towards the end also, and how to do limit orders on chain. So if you do enjoy this one, bit of a mixed bag, subscribe to the channel. Let's jump in. On screen, we have Bitcoin overlaid with the moon phases, the indicator you can pull up yourself on TradingView. Blue moon is a bearish moon where you should be selling. And as you can see, if you actually sold the blue moons, they're more accurate than the white bullish moons. But these bearish moons, honestly, have an astonishing hit rate there. Maybe it's to do with us all being synced up. And on these moon phases, we're maybe a bit more bearish and less aggressive in terms of risk taking or something. I'm not sure, but pretty hilarious how this thing maps out. Overlay this on some of your favorite altcoin charts. Some of the results may actually astound you, and probably should just have this on permanently. But anyway, let's not digress too much. Bitcoin's at 57.7. This was the US Open. As you can see, look at the volume down there. Just sell, sell, sell. The market opens in the US, and having just had their nice Labor Day holiday, it appears everyone just woke up and thought, let's sell all of our Bitcoin. So we've had a big dump. Market absorbed it. So 59s, high 59s we've pushed today, and then market open just sent us all the way down to like 57.6. We're at 57.7. So a big ugly red candle yet again. And the market in terms of the price action recently has been ruggy at best, and essentially market makers just soaking up the liquidity if it's there for the taking. It also does feel like we're going to get a move down into these regions. Not exactly sure how far down, but I do think during this month, there's a high probability we'll have a bullish uptick at some point. But I think maybe we need to actually nuke first before we can actually go higher. It just feels like it's just meandering and waiting for an impulse. You've probably seen with these stocks, correction today, but generally across most markets, stocks are either in price discovery all-time highs or very close to all-time highs. As an example, 30th of August on the SPX was like 0.5% away from breaching all-time high. Yes, it's dropped down today, but that's kind of where we are with things globally. And you have a backdrop as well of DXY potentially looking to put in a bit of a maybe pity bounce, or I wouldn't think it would reverse from here, as there's global collusion to actually get the dollar to weaken. That's what most nations require. So quite a few factors going on here, but I do think towards the end of the month, greener pastures potentially for BTC, rate cuts, quad witching on the 20th, CZ's release from prison. Sounds pretty good. Let's move on. Stablecoins. Biggest business in crypto is stablecoins. Biggest use case for crypto as well probably is stablecoins. The ability to do remittance without any middleman. Just ping your mate Tether, or ping your mate some USDC, whatever it may be, across Tron as an example, without an intermediary, is pretty astounding stuff. And also Tether and Circle fees, huge. What a big business that is. So Tether made $13 million today. Over the weekly, $100 million made by Tether. Pretty incredible stuff. Now, Maker down here, I do believe their revenue may start to trend downwards here, as their stablecoin, which was previously Dai, now upgraded or token transition. Let's jump into the news here. Maker DAO rebranded to Sky very recently. So Sky is their name. They've kind of relinquished their brand identity they've built up since 2020. But it says, at what cost to DeFi does this rebrand have? So DeFi lender Maker DAO unveils its long-awaited rebrand to Sky, but Dai dies and USDS is born. I quote, "The most controversial change is that USDS, the new version of the Dai stablecoin, contains a freeze function in its code. giving Sky discretion to halt USDS transfers from holders' wallets. So Maker's DAI is no longer, as per this transition. I do believe DAI can still circulate. They're not going to phase it out, but it won't be supported. And this company generally is moving away from decentralized stablecoins, which is not a good thing. And it actually pits them with USDS in strict competition with the huge Circle and Tether of this world. So it doesn't make a lot of sense in my mind. However, do we have something that can replace DAI? We have DYAD. So DYAD is the protocol and DYAD is the stablecoin, and Kerosene is the utility token behind this. If you haven't read this article, Grant produced on BLOCMATES, give it a read. It is free to read. So essentially, you've got these people, as an example, borrowing stablecoins, so DAI, on Maker with an ETH deposit. So a CDP, collateralized debt position stablecoin, you park some collateral and you can take a loan against that as long as you maintain a healthy loan to value ratio. So protocol wise, Alice, Bob, Charlie deposit 100 ETH ahead at 2.5K. So total value 750K deposited. Alice borrows 125K of DAI, 50% loan to value ratio. So she is middle of the road. This guy, Bob here, only borrows 10%, just 25K. This means he is super conservative. And then Charlie is the ultimate degen here, maxing out the LTV at 82%, borrowing 205 grand. So if this was DAI, you would have 750K deposited, 355K taken out as loans in the format of DAI. Utilization ratio overall for the protocol, 47%. So if you now have the DYAD protocol here, and we have the same equation, however, you can see 50-10 is 67%. So Charlie, max degen capability on DYAD is just 67% loan to value. So a bit more strict, not as loose as over on Maker. Is this a problem? Well, as Grant posted, it's not great, but we have the magic of Kerosene that can be added. So the remainder of idle capital in the system that is not being used is 47%, as we saw up here. So this protocol looks at the system as a whole versus all the collateral in the system. So this means that the system is over collateralized based on the demand for DYAD. Kerosene, the token, grants the holder access to that excess capital in the system. So this means that Charlie can deposit in his note, which is just like a personal wallet represented by an NFT. He can boost, if he wants to max this out to 100%, he can do so by adding Kerosene to his wallet, his note wallet. In this circumstance, he needs to deposit some Kerosene at 150% collateralization ratio. He can mint 167,500 DYADs, but at 100% collateralization ratio, he'd be able to mint the full 250,000 DYADs against that 250,000 collateral, which is ETH. So the long story short here is that with the addition of Kerosene to your note, your wallet, to your position, you can increase against that exogenous collateral. So maybe it'll be ETH, staked ETH. There's a version of Bitcoin. You can increase your collateralization ratio to a 100% level, but the top up is made up of the Kerosene token. Now do give this a read because the liquidation constraints, etc. are interesting. It is a safe protocol. You have to maintain 150% collateralization ratio at all times, and the same with the Kerosene token as well. You can't just pump Kerosene in and try and take out loans against that. But this is definitely a really interesting conversation around Maker DAO dropping the ball, DAI no longer really going to exist, and the new version not going to be a decentralized stablecoin. You can't have the ability to stop someone transferring it, having this kind of censorship layer. That's not good. So I think there's a huge possibility for DYAD here. And it's been getting some really good growth as of late. We'll show you the stats in just a second, but this was an interesting conversation to pick up on. This guy, Robert, here is the founder of Liquidity, which is another stablecoin-based protocol that you may have heard of, LUSD. But he was pretty much probing here just 2 days ago, asking how is it guaranteed that the dollar value of the exogenous collateral, i.e. maybe you deposit staked ETH, not counting kerosene, always exceeds the DYAD supply, given that kerosene isn't taking into account for triggering liquidations. And they go on, we have a 150% MCR, which stands for minimum collateralization ratio, for adding to the supply, i.e. minting DYAD, the stable, below which a position can be liquidated. Kerosene is considered the same as other collaterals for liquidation, always at its deterministic value and never market value. So this was a super interesting conversation if you want to give this a read as well. Reconfirming that, look, 100% LTV is just one-to-one exogenous collateral to DYAD debt. So just give this a read through. But essentially, this guy who's obviously an expert in this field, having his own project in here, which is a lot more successful than DYAD, he's saying, look, this is interesting. So piqued his interest. It seems that Kerosene token will act as a leverage long on ETH and maybe other collateral assets, with the leverage ratio being correlated to the system's total collateralization. So if we jump into the collateralization of this, TVL. So the system TVL, so this is the exogenous collaterals people have deposited into the DYAD system, $40 million, 9,000 ETH, 2,300 wrapped staked ETH. You can see 29 Bitcoins, all these different things. DYAD supply, so minted DYAD against that 40 mil is 21 mil. And if we just go down here, Kerosene's deterministic value, which is calculated as the TVL minus the DYAD supply divided by the total number of kerosene. It gives you a deterministic value of 20 cents per kerosene token. So if this is your first time looking at this, it's probably going to go over your head. But once you understand this, this token is currently slightly under where it should be in terms of its valuation. And it has traded a lot higher than its basic deterministic value. But I would suggest anytime it is below deterministic value, this is an easy buy, as it should be higher. That is the way I'm seeing this. Now, in terms of wanting to buy this, so going away on a holiday, cash swap for limits. So I'll be setting up some stinky bids, and CowSwap is probably the best place to do this. Now, I was going to do it on Uniswap, but I did see and I hear that it's like fill or kill over there. So if you post a limit order, especially if you've got a large amount of money you want to invest, you post a limit order for like 10 grand on a token that's not very liquid, it has to fill that all in one go, one transaction. So it's unlikely you'll get that order complete. But on CowSwap, it's a lot more efficient. So they have partially fillable limit orders, meaning your limit orders will complete much faster as they can gather liquidity over time rather than at once. CowSwap interface, if you haven't used it, it's pretty hilarious. It makes a big old moo sound if you get filled whilst you're on there, which is funny. Just come and do a swap on here and just listen to the moo. Yeah. Anyway, limit orders, USDC, kerosene. I think that's my bid price, around 14, which would bring it below the previous wicks here and would fill in some of this kind of area here. Maybe it comes down to there if the bottom falls out of this market. But so I think somewhere in this pocket, maybe. If we get a nasty price action on Bitcoin, everything gets to see what lurks below. So I'm thinking of bidding at 14 cents here. And I think this protocol generally is going to cook during this market cycle, as it just seems like the stars were aligning for a decentralized stablecoin. Of course, UST blew up last cycle. Dai has just committed suicide. And yeah, I think there's a good chance this really runs now. Then last thing to show, Vista. So this is the pump.fun on Ethereum mainnet, and it is at a very interesting position here at 12 bucks. This, if I wasn't going away tomorrow, I would probably be taking a swing here for at least a bounce play. And maybe, if this does pick up with what they're trying to do, because Pump had huge success on Solana, I think this could go a lot higher, but there are a few question marks around whether there's this appetite on ETH mainnet or not. Not 100% sure, but I would honestly swing at this thing if I was going to be at my computer, but I'm not going to be. So it is what it is. 12 mil market cap. The Sun version, Sun token. This is the Sun.pump, whatever it's called. Pump.fun on Tron. 300 mil market cap. Just pretty outrageous, to be honest with you. I think 12 mil for this thing looks a bit cheap here. So we'll leave things off there. Bitcoin looks like it's going to drag us a bit lower. Hopefully we just fill in maybe this area over this next week or so, and then we have some key catalysts in the market coming for us. Maybe we can hold somewhere above here, 55, 56k, something like that, and then fill your boots, and then hopefully Q4 kicking off the kind of mega bull run and a breakout of BTC, which is what we need for the market to really start to ascend once again. So that's all for today. That's the update. Hope you enjoyed this one. Check out some of the documentation around these things. Very interesting stuff going on in crypto. People say there's no innovation in DeFi. There certainly is. Anyway, enjoy yourselves. See you in about a week. Peace.